Hi, and welcome to another market analysis video from thestealthytrader.com. Today we're going to take a quick look at the indices. We're going to revisit some of the swing trades that we've done recently, and we're going to take a look at a couple of opportunities that we have our eyes on for the next few days. Here is the Dow chart, and as you can see, we've completed a down channel, and last week the market powered through the channel and started another consolidation, which we believe is going to involve another move higher, potentially taking out the 18,100 prior high. Now, let's take a closer look at this week's action. Each one of these bars represents a day: Monday, Tuesday, Wednesday, Thursday, and tomorrow has yet to be filled in, Friday. One thing to note, aside from the fact that we've clearly broken out of this down channel that started in late December of last year, we're also above the 50-day moving average. This is a daily chart, the green line, and the 20-day moving average, in addition to this pink line, which is the 200-day moving average, which, as a side note, we held on that quick pullback 14 days ago. And from there, the market just propelled higher, consolidated this week, and today it moved like it's ready to go for another leg higher. Now, we're going to take a look at the NASDAQ, which is a slightly different chart. It was more of a wedge pattern rather than a declining channel like the Dow. But net's the same result. Again, a bounce from 2 weeks ago, a little bit of consolidation above the wedge trend line, and then Monday, Tuesday, Wednesday, Thursday, again, actually all-time highs today in the NASDAQ, above the 20 and 50 day and way above the 200 day. So net, the NASDAQ looks as strong as it could possibly be. Let's take a look at the S&P 500. Similar to the other indices we just showed, above the 20 and 50 day, way above the 200 day. Again, 2 weeks ago, the touch of the 200 day and the immediate response. Not quite as bullish as the NASDAQ, which we just looked at, but clearly looks great. We're going to extend it a little bit, and you can see the S&P on Monday, Tuesday, Wednesday, a little hesitation, and today, Thursday, powered higher, just like the Dow and the NASDAQ. And now we're going to look at the Russell 2000. The IWM is the symbol. This one, as has been the case, has been a little bit more reluctant to explode higher. We have multiple touch points on pullbacks to the 200 day. As you can see, this pink line is the 200 day. Still above the 20 and 50, but not as high above as the other indices. Also, more of these candlestick wicks, these spindles, I call them spider legs. Indecision here was today was Thursday, this was Wednesday, Tuesday, Monday. Just not the cleanest looking, and I would say probably the least bullish. Also, the high is 121.41 and it closed at 120.80. So, like the Dow, within range of all-time highs, and very well tomorrow could make that happen. For a lot of the stocks that we look at, it would be great to have the Russell really get serious about taking off and show some real conviction. We're looking forward to that. Now it's time to revisit some of the swing trades that our premium members had a chance to take part in. One of them, ELY, Callaway Golf Clubs, we saw a breakout right around here at the 820 area. We followed it A strong opening, pullback. This is a 30-minute chart. Each one of these squares is 1 day. We bought on the breakout, which was on last Thursday, and since then, an expected consolidation pattern with a high of 878 today. It settled at 867. We see no reason why this one couldn't even continue much higher, and we're going to stick with it until given reason to get out. The combination of a stronger market and a strong stock makes for a great, great opportunity. Here's another look at ELY. This is the daily chart, and it just shows how the markets tend to move in bands. We had the breakout, which is over here, a pullback, held the 50-day, which is the green line, powered higher, and for the last 1, 2, 3, 4, 5 days, we've consolidated, with today looking like the potential for a breakout. Above the 200, above the 50, above the 20. Also notice the volume, the increase in volume that accompanies bullish candle days. You want to see that. Now, APRI is another one that we suggested to our premium members at around the 140, 141 area. Again, it was based off of a stronger open. One of our proprietary indicators is green arrow. We got involved on the breakout, our premium members also, and since then, with a stronger market, we have seen no reason to get out of our entire position. We did take partial profits at $1.71, the 200-day moving average on this daily chart, as we're prone to do. This has been a very wise decision in the past year, year and a half, with such a choppy, volatile market. But going forward, just like with ELY and a variety of other stocks that we're looking at, a strong market that could very well really break out with conviction, you definitely want to be in strong stocks like this one. And finally, a couple of stocks that we're keeping a close look on. With the stealthytrader.com, our decisions are made in real time, which is what separates us from almost all the stock opinion and trader education websites. What good is an opinion that if the market changes direction the next day, most probably these strong stocks will suffer a bit. We like to take our profits. We like to run with strong trends, but we're also not shy to take profits if the overall market does an about face, which happens all the time, at least in the past year, year and a half. So with EXEL, we had a nice breakout 3 days ago. A little bit of a consolidation on Wednesday, and then today, Thursday, we liked today's candle. The volume bars are okay. Nothing hysterically great, but they're okay. We're above the 20-day, we're above the 50-day. The 200-day is above the market, which is again something to keep an eye on at $2.53. And yet again, if we get a chance perhaps to buy it on a pullback to 220, 218, that's still a nice move. 20% from here to test at 200. We tend to believe that on stocks that are strong, like this one is, that attempts at the 200-day moving average are always the end target, at least initially. It's a really nice soft target. Another stock that we're keeping an eye on is UNIS, UNIS. As you could see, going back to January 12th, you had a breakout going back to actually mid-December, and it started to propel higher to around the 460, 450, 460 area. Of course, the usual choppiness as the NASDAQ was choppy itself. These stocks, and this is a very important concept in what we do, stocks usually will go in the direction of the overall market. We like to have the wind at our back. Very important. So this one pulled back today to the 20-day. It's pulled back to the 50-day a couple of times. We think this is a decent area to consider getting involved. You do have the 200-day way below the market. So this is one where being an actual subscriber to our service would really be beneficial, as like the other stocks we mentioned, EXEL, UNIS is not one we're 100% convinced about. We are very volume based. A lot of our decisions are based around volume, but that's just a very simple way of explaining how sophisticated our volume indicators are. This one, we do keep track of the relative volume, which is important. Today, the volume was 180 times what it usually is. Even though it came off, there is interest in this stock. So we'll be watching to see how it handles the 426 area, $4.26. And finally, to sum up some of the stocks that we'll be keeping a close watch on is B Cove, Bright Cove Incorporated. We got a signal the other day on these power higher opens due to earnings, which is these boxes here. We don't usually like to get involved on that day because after such a move, especially if the indices do one of their hiccups, it's very easy to get caught on the wrong side of what will turn out to be the right side. But we don't want to put our members through the agony of being on the wrong side of a trade only to see it go exactly where he wanted 2 weeks later. So we're watching this one carefully. It's consolidating over the last 5 days at around the 816 level. Volume has been okay. Today, 171% of the usual volume. We like that, especially since we have moves higher, consolidation, move higher, and we'll be keeping an eye to see if it gets above 837. Our proprietary indicators have shown some really nice long and short opportunities. So in conclusion, we hope you consider the stealthytrader.com. Feel free to reach out to me, Jonathan, and I'd be happy to go over our philosophy, our methodology. We have a 2-week trial right now, and I think this could be a great opportunity to get involved, as the indices look like they could very well power higher, and the inconsistency that we've experienced on prior rallies might have seen its last days, and we might get some really nice sustained moves. Thank you for participating.